Right. What is up, everyone? Trey's back in the building. Hope you're having a good day, man. I figure I got some time today. Yeah, I got some time. So I'm going to go ahead and what am I going to do? I'm going to go over a bunch of different stocks. I'm just going to pull up stocks and just look at them, kind of seeing where they going, where they not going. So if you have any questions, and if you're missing this, if you're catching this in the preview, the preview, the recording, the playback. I be having brain farts like something terrible when I'm live. Yeah, if you catch this on the replay, just go ahead and put something in the comments below, and maybe I'll catch it on the next video. But then you gotta like and then you gotta subscribe. Well, not necessarily like it, but subscribe and hit the bell, because then that's how you know when the next video's out, right? All right, so this is the market. This is the heat map. Looks mixed, right? Looks like I can make spaghetti here. I got a little bit of everything. I got every color everywhere, right? At one time, the technologies was nice and bright green, looking good. Amazon. I bought some positions in Amazon today and yesterday, I believe. So I'm actually real bullish on that also. And Tesla. These two right here, right? I'm really bullish on those. As you go through these stocks, you'll see a lot have big pullbacks. Some already like in correction, bear market type things. And I think those are the interesting ones to scoop up. Like the market's been ripping something fierce, right? So let me see if I could open up a new window here. And you can see what the market's doing, right? It's been ripping something fierce, but it's coming back. But I'm not talking about just today. I'm talking about in general, and you know what I mean, right? Because we all been making money in this thing. Let me pull up the SPY real quick. Then I want to pull up Amazon. Right, so there's the SPY. And excuse my yellow lines, but just kind of look at the candlesticks. All right, I'll tell you what. I'll just go ahead and clear them all out. Right, that's the market. That's the SPY. You want to look at the Qs? That's the Qs, right? So I think the trade is, and it really almost always is the trade, but not all the time. This hasn't been doing anything. Had that disappointing quarter. It was a great quarter. It just wasn't, it just needed to have more firepower beyond that. I mean, it was about to break 3,800, go to was at all-time highs actually. And the quarter just wasn't good enough to go into new all-time high territory. So I had to pull back. Thought it would come down to here, but it's getting some nice strength. Stochastics. I'm liking everything about it. I'm not saying that once it gets to the top of this range, it's going to have some resistance, and it probably will. It definitely will right here. And I'm saying that the breakout's going to happen right now either. Hey, what's up, Mr. Sage Vince? When somebody's name pops up, I gotta get close to my monitor because I need glasses and I can't see, and I don't have them on. I need reading glasses. I got glasses all over the place, but if I put them on to read, I can't see anything else. I only can, need those glasses to read. Man, if you got any stock you want to look at, just throw it in there. Sage. Hope I'm pronouncing that right. So anyway, there's Amazon. So I'm liking that. Even the market's being kind of weak today, and you see this thing is up. It's been having a nice little tear the last several days. Look at that, right? So you got to respect that. Yeah, you got to respect it. Respect it. Put some respect in my name. You'll know what I'm talking about? Anyway, that's up 10%, 9.2% in 12 days. So that's a nice little rally. Nice turn. Turned on a dime. I should have played that right where it should have turned too. I actually thought it was going to a fake, a bounce, because it had to bounce there. And then I thought it was going to turn around, but it didn't. So I missed that trade, but I'm in it for the longer trade, and I got a little short-term trade on as well. And then I talked about this in yesterday's video. Let's look at Tesla real quick and pull up the weekly, see how it's breaking out as well. So I think this is the trade, right? I think that you got to catch these stocks. It just hasn't run. See, it broke out from there. I could draw this any which way, got the breakout. But Tesla is... It's 18.6% off its high early this year. I mean, it went into bear market territory. When was this? In May. From the top to the bottom. That was May 17th was the low. It was down 38%. The market was just constantly making all-time highs back then. So these are stocks that you could Get in if you worry about the market being toppy, like I am. I'm worried about that. So I'm into that as well. What's the stock I was just looking at? Had it up on the screen before I started. Ooh, man, I forgot. Let's look at Home Depot. I told you I'm going to be pulling up all kinds of stocks. Whatever comes to my head. Because I like Home Depot as well. Just because it's Home Depot. And you don't really ever get a pullback in this thing. Of course, you get pullbacks, but you know what I mean. Nothing severe, and even when it's down, you always have faith in Home Depot. I mean, the real estate market is hot. You buy those new houses. Guess where you gotta go after you close? You will be in Home Depot in the next 24 hours, right? So Home Depot is a beneficiary of all of that, and even when it's not hot, you still be needing to go to Home Depot. Home Depot and Lowe's. Something Amazon just can't take out. Because generally things for the house, you need them right now. And until Amazon can figure that out, you ain't got nothing to worry about with these. I always think, they won't buy them or try to do anything like me, because it would be like you start thinking monopoly. So I think these guys, they're just going to let this business be untouched. You can't get product to them fast enough. Although, they're trying to buy these Sears warehouse. They're trying to make these retail stores. What I think is just, why would you want to do that? You where you are now because you don't have any stores. And look at the people with stores. They're not doing well because they have stores. So I don't know why you want to start making stores. Maybe like the Amazon Go store that's unique, but don't make no retail. I don't know, man. Anyway, that's what they want to do. Yeah, so that's that. I'm gonna look up. These are stocks that I brought up in yesterday's video. Check those out. I just wanted to pull up a firm because it had a big day yesterday. The end of Friday. I think news leaked on Friday evening. If you've seen that pop, if we go to let's go to 15 minutes, and let me see. Is that Monday? Oh, I don't have my after hours up, but something popped up in here. But yeah, it's a little pullback today, right? Something like I don't really know a lot. I was listening to Josh Brown on the halftime report, and he's not liking, and we're going to jump to it, MasterCard. He said he sold his MasterCard, even though that is an ugly monthly candle. That is a outside month. Not quite because of right there, but I'm going to go ahead and call it, man. I take an outside month, and I'm like, if it's closed, it's good enough for me. You know what I mean? And if this thing closed, yeah, today's the last day of the month. It's showing that it continued. That's an ugly candle. But if you look at Home Depot, did it here, right? It came right back. Did it here? Came right back. So it doesn't last long. But he was thinking of firm, they payments now, at the credit cards, they're not going to be able to hold balances. But MasterCard and Visa, they're not into the balance game. They're transactions. And if you could buy something on Amazon versus once on a credit card or whatever, say you buy a PlayStation, you do one charge. Well, if you put it on a firm and then you're going to do pay it out within 10 months or so, well, there's 10 more charges for the same item that would have been one. Because that's what it's all about, transactions. So I was kind of confused when he was talking about, well, these guys, they're going to be taking away all the swipes from MasterCard. I don't think so. I think it's even more swipes. So I don't get it. If someone can get it for me, go ahead and write it in the description. Write it in the comments below. But MasterCard is breaking, with help from him promoting it to 2 million people or so. It's breaking support there. So that's not good. This is monthly support too, meaning that's huge. A daily candlestick is one thing, but monthly is another. The jewelry box is checking in. How you doing, babe? Now get back to work. Anyway, so there's MasterCard. And I think, this is a stop. By the way, none of this is financial advice. This is just my thoughts. I'm expressing my thoughts on what I like or thinking about. Okay. Entertainment, education purposes only. Don't ever take financial advice from a YouTuber. All right, there we go. That's the disclaimer. All right, so I think you can look at this and get ready. Get ready to pull the trigger. right? Because this is a stock, MasterCard and Visa. That's what it's still all about. It ain't going nowhere. I don't care, PayPal. I got the PayPal card. Guess what? I got my debit card. It's got a MasterCard Visa logo on it. I got the Cash App. Guess what? It's got the Visa logo on it. See what I'm saying? So they ain't got to worry about them. They're getting the swipes. They still getting the swipes. So these guys ain't going nowhere. I think that's false. I think all these red candles was like, oh my God, the future. No. When we worry about cashless payments, where we pushing our thumb against some shit, then you have to worry about MasterCard and Visa. But as long as you got those plastic in your card, in your wallet, and you swiping or you inserting it with the chip, you're good to go on these things. You're good to go. So anyway, I like MasterCard. And let's take a look at Visa real quick. Visa, same thing. Looks a little stronger though. Look at all these drawings. You can tell I'm trying to figure it out. I'm trying to get the master plan going. But the same thing here, and I'm going to remove everything. You can see how it's drawing almost that outside month. Almost. But as you can see here, the major support here is a little bit lower to go. So just keep an eye on that. Because if you look at these monthly candles here, this is Visa now. They don't, look, here's the C word. I don't like using those words because then I think Google says, this is a video with bad info and we're not going to promote it. It's bad enough my videos don't get out as well. Anyway, so look, since that is two monthly reds, you just don't see more than that. So just here, today's the end of the month. Of course, this candle will be red. Expect maybe another one. And then it's all aboard. Right? It just doesn't happen in Visa. It doesn't. 2 candles is like max. And I'm going way back here. This is 2015. Here, should I scroll back some more? Here's 2 candles here. When is that? October 2016. Oh, 3 candles. I was wrong. But that brings us back into 2015. By the way, I remember that decline. 2 in a row. Here's 2 in a row. Way back in 2014. Here's 2 in a row. Way back in 13. Dell Young. Crypto. Yes, I am bullish on crypto. I still got to talk about stocks, though, because that's my thing. I'm getting ready to buy. I'll talk about crypto real quick. I'm getting ready to pick up some Arve, some Compound, and some, what's that other one? They all do this, and Maker. I really like the DeFi space and that whole loan and lending stuff. That's my favorite space. I like Ethereum. But the thing about Ethereum, transaction costs are expensive. God damn, I wonder why the stock is going up like that, or the coin. But Bitcoin and Ethereum, of course, your basics. And then I really like everything in the DeFi space. And if you have a blockchain, like Phantom. I bought some Phantom the other day, man. Check that thing out. If you have a blockchain, look out. Right? So anyway, look, 2. Okay, back to stocks. All right, 2 candles right here where we are. 2014, 2 here, 2013. So you get my point. Here's 3. No, yeah, 3 in a row. 2010. I'm like 11 years back. So let's go back to the future. Back to the future. I never thought I would use that in a sentence without talking about the movie. I think I'm the first one to ever do that. Anyway, so 1 candle, right? Expect 1 more, and it'll be a good entry. That's a good entry for me. You just don't really get the 3 candles. So I'm checking that out, right? Of course, PayPal. I talked about PayPal yesterday, PayPal and Square, because this is the future, right? PayPal and Square. It's down today, almost giving you an opportunity. I think when the market, here's the thing though, what I worry about with these stocks. And stocks that I like too, because I think the market's toppy. I just think it's like, oh man. Whew. And if the market pulls back, it's going to take down everything, right? So you have to be careful with purchases when the market is toppy. Excuse me. I have indigestion. You have to be careful when the market is toppy, when we're expecting a pullback because it's going to take down everything. But if you're having a stock like we was talking about, like Amazon and Tesla, things that's just been kind of down already, I don't know if it's going to go that far down. People want to scoop those stocks up, and they have a floor, and they're not going to let those ones drop too much. But if it's at an all-time high, they'll let it come down. So that's what I'm liking right about now. But these stocks, like, let's go to Microsoft, like things is just ripping, man. I mean, do you really want to get in here, start a new position? I am buying some Microsoft. I don't know. I think you just got to wait for that pullback. You see that line there, right? You generally, if you look, and that blue line is my 9 moving average. So what I'm drawing here is how far Microsoft usually gets away from it, right? And you can see my point. That's why you gotta have, and you could just see it's just way up there. Even the last time it was this far away from the 9 moving average was here, and then look what happened, right? That almost looks like 50%. So here, I'm guessing, I don't care, man, I am guessing a pullback to at least here, like 275, 270. Where are we at now? 303? And that's nothing too. 30 points, nothing. But just can't do it. I don't know. I'm just, I've been doing this for a long time, so I didn't jump on the train since the lows last March. And, a lot of people don't know what a pullback even looks like because it hasn't been a 5% pullback in over 200 days, which is a 100-year record. Anyway, so that's crazy. All right, so what was I getting ready to talk about? Nvidia. Let's talk about it because I want to show you this. And I'm so disappointed when I see this stock because I'm like, oh, yeah, look at that. Because right in here, right in this area, right there, I was buying way out of the money call spreads. And sure enough, they would have been in the money now. And they wouldn't have expired until another year, almost 2 years. And that position was going to be worth $47,000. So profit. I didn't even put that much money into it. So when it reached 720 before the split, pre-split, I called myself just, that was a big run because it went from like, what was it, like 590 to 7, just blew. I was like, all right, I'm going to take the position off. And then when it pulls back, I'll put it back on. Well, as you can see, it never pulled back. And I never put the position back on. So, oh well, so be it. I mean, right now, that pre-split, this is, if you remember in the videos, it kind of broke out of that 550 or so. Well, pre-split, this is a $900 stock now. So, wow, incredible. It was really incredible. So, there's Nvidia. Let's pull up the other monster, Google. Here's another position that I was so upset. I lost. I just had the opportunity. All right, so when this thing was trading at 1,500, 1,490, I had bought the 2,100 call, something like that. Cost me $11,000 for that. And I wound up getting out of it, maybe a little profit. And as you can see, we're up at 3,000. You know what that position would have been worth today? I don't even want to do the math, but very upset about that as well. So, and the reason why I'm like selling, because I'm just not used to stocks going straight up. I had to reach for more. My strategy would have worked. Yeah, my strategy would have worked any time in the past. Anytime. I'm taking a little break here. I'm going to pop some vitamins. It would have worked any time in the past. But no, this is like a new era. And I have to train myself to just, we're going straight up. Don't sell until we're at a 90-degree angle. Don't sell. All right, so you look at Google, pull up the monthly. We're about an 85, 80-degree angle. So we got some more upside to go. That's the new way. Yeah, I'm sorry, y'all. Little pause in the cause. I'm swallowing some, like I said, some vitamins. But Google is a monster, and it's still cheap. And this thing still has a lot of room to run. And I'm gonna say, because you see this run just like I was out. Look at that, man. It's incredible. It hasn't had a run like that in years. It kind of done it on light volume as well. Nobody's really in this move. They probably waiting for a pullback as well. So when this thing does pull back, it's not going to pull back hard. It's just not. People's going to wait to get in. They're going to be getting in. All right, that was the last one. Yeah, so like Google, Apple, we talked about it yesterday, but did you hear the news? Look at that breakout. Unbelievable. It's down today. Did you hear the news? Did you hear the news on Apple? Let me see. South Korea. This is it right here. Let's see if I can bring it up. See if I can read this really fast. What's important? Yeah, Google and Apple are set to take a blow in South Korea from a new law that requires them to open up their app stores, for the most part, to competing payment systems. But a more severe hit can come from the rules creating a precedent for other countries. So when you buy something from the App Store or whatever, or you other processors can jump up in there, and here's the thing, it's not even about South Korea, it's about adoption. What other countries are going to adopt that? And if that's the case, and remember, I think the Apple case is still the Apple and that guy from Fortnite or whatever, I think that's still under, they didn't come up with that ruling yet, but I'm not sure, but don't quote me on that. But if this starts to get worldwide adoption, I think that the stocks can come down a lot. So it's funny with that out there that it's only down 95 cents. So this breakout's pretty strong, but you got to keep an eye on that. Are they finally going to come after these giants? I don't know. Let's go into, let's look at Moderna. Just came off the top of my head. Is it Myrna? Did I get it right? Yeah, Myrna. Wow. Look at it. When you pull up the monthly, I say, oh, shoot. God damn, it's going lower. Oh, man. I know a lot of people like this stock, but that's an ugly can. I'll tell you what, though. If it ever does try to go higher, that's plenty of resistance here. There's plenty of resistance. That's what that's showing me. And today's the last day of the month, so that candle is final. Let's pull up the daily. See that sell-off. I don't know what happened. I don't know the news. But that's not pretty. I know a lot of people still like this stock. I'm trying to get my drawing over. Man, it's down 27% in, how many days is that? 22 days. Percent a day, average. And this is what I mean. Like, the market's at highs. There's a lot of stocks that just ain't participating in that. Moderna is one of them. What's up, JRH? What's going on, man? I figure I just get on here and just talk about a lot of stocks. I don't know. I got nothing to do. I'm bored. So I'm going to get on. And what I normally do, I just figure I'd press record and start looking at different things. Even though I've just been trading the big boys. I've been, just sticking with the big ones. Y'all know how I always like those hundreds of dollars, them expensive stocks. You know what stock I pulled out of that? Well, I made nice profit in it. I think I made over 10,000. Is this one, Intuitive Surgical. You can see I was playing all that, and it just went from 800. This is where I was in, somewhere around here, all the way up to 1,000. This is crazy. And I got out. I totally exited the position right at 1,000, right around here. Just like it's a little too fast. So, but I don't know. It's what's the angle here? We got to look at the angle. It's 53 degrees. Well, it's not going straight up yet. It's not 90 degrees. Oh, when I pull up the monthly, it's almost, let me see. All right, the monthly it's 79 degrees. So 80 degrees, another 10 degrees, maybe I could have sold it once it goes straight up. See, that's kind of 80 degrees. We got to go to 90 degrees. Now, I know this sounds silly, but damn, that's the mantra. 90 straight up, then sell. This is crazy, man. But I loved being in the stock, but I had to get out. I just had to. 500 is up 210% in a year and a half since the low. It's great. It was a great trade. So I made lots of money, and that was a sleeper. That one was a sleeper. No one was really talking about it, but I was in it, and I had my little options going on, and I got out. Let's talk about Chipotle, because this is another one. It's almost straight up. Yeah, see, that is straight up. Maybe this is time to sell, right? Look. Oh, 85 degrees. Maybe 86. Yeah. I think that one might be close to sell. It's down $17 today. Maybe other people was looking at the angle. I don't know. You can see how far it is away from my moving averages. It never in lifetime been that far away. So I still have a position on. I got leaps on. I didn't totally sell out of it. I think I owned the 1960 call and sold the 2000 against it that expires in 2023. So I'm expecting it to be above 2000 when it gets over here, but I don't know. I mean, if this thing pulls back to the moving average, I want to get in. I want to get all in. A lot of people miss this as well. They're not really in it. Look at the volume down here. There's non-believers in that move. Right? And you can see when it's selling, they was selling it hard though when it was time to sell, but this was actually pretty good buy-in right here. But look at that move. Incredible, man. That's 58 days of 46% in 58 days, almost a percent a day. Incredible. That's crazy. So that's Chipotle. I made my money and just kind of reduced the position. And Starbucks, I'm in that. It's one of my faves. I think I'll be in this forever. As long as I see lines that go around the building for people waiting for a cup of coffee, it's ridiculous. Are you kidding me? I get it, but I don't get it. Because when I want my coffee, I want to get it and go. If the line is around the building, forget about it. I'll find something else. Where's the Circle K? I'm in that Sip and Save for $5.99 a month, right? So free coffee for the most part. It's free. 2 cups and you've paid for the month. So, yeah, find me the Circle K and I'll get my coffee from there. So, yeah, so as long as you see that, I just think it's good to go. Just keep an eye on the lines. But Starbucks, you can see that consolidation. It's a great pullback. Where it's sitting at right now, you can see here, look at here was a consolidation here. We should break out and start heading higher. And this is, once the economy really starts to open and the D word, the DELTA, subsides while we peak DELTA, you know what I mean? This stuff should go high. All these restaurants should really finally take off, like McDonald's. McDonald's sitting at all-time high. I tell you what, when you go to McDonald's in the morning, especially in the morning, at least where I am, they be closed. They don't have enough employees to keep the dining room open. Be like 2 people running around making food for everybody. And if you do the drive-through, like the order app, by the way, I be using the app. If you're not down with the McDonald's and the app, you got to get, as soon as I be at the light, right, waiting to turn into McDonald's. And I, boom, press because you can't say you're here until you're there because it knows your location. Say I'm here, pick spot 2. Always pick spot 2. Even if somebody said, just pick spot 2. Anyway, about time you drive in and get to the spot, they coming out with the food. And you beat the line and everything, man. I love it. Love that app. Anyway, so back to the app. What was I going to say? I forgot. I was going to make a point. But anyway, use the McDonald's app. It's awesome. Oh, yeah. They so short on staff that sometimes they don't have people to bring out the food. So you'll be sitting there forever. And when you finally decide, let me go in there and see what's up with my food, they'll be like, oh, I'm sorry. You didn't have nobody to bring it out to you. What? So you're just going to let it sit there. So anyway, that's McDonald's. Anyway, look, up $2 today. It's nice. Wait, what's the S&P? Because the Dow's down 24. The S&P is down 5. McDonald's is up $2. McDonald's is in a Dow. I believe it's a Dow stock. Anyway, so McDonald's. Let's look up, because I'm looking down here. Let's look up Goldman Sachs. Now, I'm all over the place. Here's a stock that's straight up, but we know when it's time to sell, because I'm going to measure this. 80 degrees. We got another 10 degrees on this one. All right. It's not quite straight up yet. Get another 10 degrees, and then you could sell this one. But Goldman up $1.30, $1.30 today. It's just incredible. I remember I was in and out of Goldman for years. Especially I think I started getting interested in Goldman back here. It'd be pre-2008. And just for years. And it's just been choppy. It's been choppy. It's just a choppy stock until now. Until the end of last March. Now it's up 210% in 476 days. It hasn't had a run like that in its life. Here's one. Let's see. Oh, I'll take that back. Here we go. 230%. Right? So it had one. I'll take that back. Take it back. All right. But if you can use this as a measurement, because this is the '08 low, and to the '08 high, when it, was 300%. So if you can use that as a guide, maybe you get, let me see, bring it 300%. Oh, shoot, no. That's not 300%, is it? That's 263%. Wow. Let's try that again. All right. So that would put us about 487. Let's just round it off to 500. So maybe that's where Goldman Sachs is going. A lot of when I'm looking at these charts, I like looking back. There's so many answers in the back. Now, JRH is watching. I say that all the time, and it works. Just look what it's been doing for years, and generally, it'll continue to trade the same way. You look at a choppy stock, it's like this. I'm going to take off this last trend. And when you see that, that's what your money's going to look like if you decide to invest. It's going to look just like that. It's not going to change, right? So it just does what it's always been doing. But not this time. Look, it changed. Changed on us. You said you hooked on Starbucks, those lines. Do they? They didn't move fast. I get turned off. I really get turned off on those lines. So that's cool. So when it's coming around the building, all right, so you got the window on the right side, the side of the building, right? Does it go, when it comes all the way to the front corner of the other side of the building, you know what I'm talking about? Where you got to drive, where you almost like a building length from the speaker, and then you still got to come around. How long is that wait? Okay, so that's almost like a full lap around the building. How long is that wait? I'm interested. But I tell you what, like I said, it's all good because I be in the stocks. Starbucks is one of my biggest holdings. And even when it goes down, I don't even be worried. Even though, actually, I take that back. I got worried on this last pullback. When it started approaching, is this it? 109 again, because we was as high as 126. It was the breakout. See the breakout? And then we came down to, what is it? 10, no, this low. Okay, that was that low. I'm taking the wrong low. 113. I was like, what? Are we really going back like that? I just thought we cleared that whole area, but I don't be concerned. Just buy more, or I'll roll the position if it's like options and give it more time because I just know it's going to work out. These guys did pretty good in the whole sickness thing, So anyway, yeah, I like them. Consolidate, broke out. This was my first when I was trucking with Schneider, and I did my first stock video. It actually wasn't my first stock video. I had some in 2006 or so, something like that. Anyway, but when I started doing stocks, this was my first stock I talked about, and I talked about this breakout right here. And if y'all follow me then, I don't know if y'all remember. And I said right there, oh, you got to buy Starbucks. So my first pick was like fantastic. I was like telling people, man, it's been consolidation for 3 years and it's finally breaking out. And we went from 60 to 100 in no time. And then you know what hit. So we're back there, right? So anyway, I like Starbucks. I always like Starbucks. And I like the coffee. I just don't like the lines. You said the one by your house is drive-through, only 15 cars deep. Oh, wow. Damn. You know what? I'm going to try it one day. As long as I have nothing to do, where I don't have to be nowhere, I'm going to try that. I'm going to hold you to that 5 minutes, JRH. Now, I know some Starbucks are better than others. But let's see if I guess that's why people wait, because they know it's fairly quick. All right, I'm going to give it a shot. Give it a shot. Um, and my favorite, I'm not into the exotic drinks. Like mine is kind of corny. It's just regular coffee. The blonde roast. Give me a large. I still say large. I know what do they say, venti or I'm not into the Starbucks language. So give me a large blonde coffee. That's what I say. Anyway, just trying to look at. Let's pull up Nike. This was another one of those. I was in this pretty hard, and it broke out, and I don't think I'm in Nike anymore. I was in it since the 90s, right way down here, and I rode it all the way up to there. So that was a good ride for me. That was a good trade. So here's the monthly. All right, we at. Damn, that's not. Oh, okay, there it is. 77 degrees. Another 10 more degrees up. Now, I don't know. I mean, Nike, when you look at Nike, it generally just doesn't go airborne like that. But this one is. So this one will make me really be cautious. Like, you can see what happened here. And it was kind of airborne. It was lofty, and it went sideways all the way back into the moving average. I actually think, and I could draw those lines right now, that we almost have a similar move. I'll draw that to see if I'm right. Leave it there. I have a feeling we just trek sideways. And, let the moving average, right? That'll be the moving average. It'll catch up. And then, boom, there's your buy point, right? So, keep an eye out for that. According to this, what I just drew, we're looking at the end of the year, right? So, this is always good buying any pullback. I mean, I know there's competition like, what is it, Under Armour, Adidas, but there's really no competition. That's just people in the field, There's no competition. So you gotta like Nike. Let's look at Lululemon. This is a stock that I had a huge position on, and I messed this trade up as well. You can see the little head and shoulders I drew. Remember, it didn't break down, so it always goes hard the other way. There's my arrow. And look how I just followed that arrow straight on up. Yeah, I got out down here. I actually got out on the lows, and it was because I was in. I actually think I bought in on the highs. I got in somewhere around here. 370, and I was in it for almost a year. Now remember, stocks are ripping, okay? I mean, Lululemon it even came out with a good report, beat and raise, all of that. And it was just going down, and it went down here to 265. Remember, I had like 400 calls on. I was like, I gotta go. I can't take the pain no more. It was like a slow bleed. And the reason that I got out, knowing that maybe I should have hung in there, it's the low, or maybe even think about buying more, is because the relation, like the market was ripping. And this thing was just getting sold off constantly. Nike was everything. And I was like, what is it that I don't see? And I don't know. I mean, look at the volume. I mean, they was selling. So anyway, as you can see, the selling ceased and back to 400, where I thought it would go in the beginning. But if you keep an eye on this, it's right there. It's at the top of the range. And if this thing goes a little higher, it's going to break out and go a lot higher. So I like Lulu. This is something I think when earnings comes along, you almost might want to consider the breakout happening. I don't get into it now because I feel like, I sold it low. I don't want to get in high. It just seems weird, Oh, okay. You said you hit big on AMC last week and loaded up on Q, Spies, Facebook, Apple. Wow, you loaded up all right. I hope it works out. It looks like it is. Let me pull up AMC. I've been wrong on this thing forever. Just still not my cup of tea, but Yeah, it looks like it just, it looks like it wants to go higher. It looks like you definitely found your level of support right there. You even got, if you're looking close, you got that double bottom, maybe triple bottom. That's perfect. And it looks like it just wants to go higher. So, I guess I like it, but just not my thing. But if it's anybody's thing, like yours, yeah, it looks like it wants to go higher. What is it, up today? Yeah, it's up 6%. Wow. Getting ready to come into some massive resistance right there, okay? So just note that, right? Right here. Massive. So maybe a couple more, look at that, what is that, about 50? So maybe a couple more points to the upside. It definitely got to be some selling right there. These guys are holding the bag. Think of them as guys. They're holding the bag, right? So they was in it, waiting for it to go to 500 or whatever, and they was wrong. So if anybody's holding it, they're going to want to get out. And that's what resistance is all about, by the way. So yeah, just got to look left. Just look left to see what's going on. See what you see over there. Yeah, other than that, should chop around through there. And then if it breaks out and starts to get to all-time highs, forget about it, man. Sky could be the limit on that. And that's the reason I'm saying is because everyone that would have bought the stock is making money. And there's really no incentive to sell. Everyone's making money. Let's talk about Twitter. All right, so here we go. This was a stock that I was interested in. I was talking to Cashmatic, I think. I haven't seen him in a while. And it was pre last year. When was it trading at? It was down here. I think I was over here, 23 or so, and I had like 40 or 50 of the 40 calls, something. I had a bunch of calls. I loaded up. And it was a good position for a while, but then when it started coming down, I think it was here. Remember I said this one breaks your heart. I was like, I wanted bailing. I think I lost money on that. I made money, then I wound up giving it back. Because it just, when this thing goes down, it's a heartbreaker. Every down move is huge. So you gotta be careful with Twitter. But they said they got new streams of revenue and they're gonna be making all kinds of money. And it's right there at the all-time high for the most part. It was perfect sell-off here. It's really nothing to do with the company. It was just a double top. It happens all the time. So let's see what happens when it gets back up to here. I actually think Twitter will make that all-time high and then even higher. It's funny how it was here, by the way. Right here. Let me see. This is March. Okay, right here, January. It was right here when Trump left office. And he was, the big Twitter thing, and everybody didn't think Twitter would survive without him. But as you can see, look what happened afterwards. Okay? All right, there it is. VIX. I'm looking at the VIX, and I see it's up 3.8%. Uh-oh. Yeah, look at that little rise in the VIX. So, I don't know. This little pullback going to be sustainable? Are we going to be able to sustain? Yeah, look at the selling. Look at the S&P. Just, damn, it's almost at the low of the day. This was mixed when I started the video. Now it's starting to be more red in there. NASDAQ's even down. So, be careful. We are coming. This is the last day of the month, and September is generally vicious. Not necessarily that is a guarantee for us to just fall off the cliff, but it's just volatility. Volatility, September, October. Just a lot of volatility. So get ready for it. And since we're at all-time highs, it's kind of, you would think that could be a sell-off. And sell-offs could happen out of nowhere. By the way, 87, if I remember my history. And I was like 18. I have to basically read about it because I didn't know what the hell was going on in the market. Anyway, but it came out of nowhere. Came out of, you know what? There's another one that came out of nowhere, 29. Read about the 29 crash. Everyone was all happy and it's great. You know, it couldn't be better. Just boom. It was just over. You know, I don't know if we have anything be like that. I'm not trying to scare anybody, but that's when it happens. It happens when no one expects it. You know, so you have to be careful. You have to be careful. We got circuit breakers in effect, so no one's going to be throwing themselves out the building or off the roof. But I know there's a lot of new investors out there, and I know a lot of new investors even got loans to invest in heavy margin because look, the market's going up. It's like you can't lose. You get money, get in your credit card. So what's up? Exclamation. I'm just sitting here talking about whatever. Get your credit card, get one of them low interest loans, advances, and just buy stocks. And it's been working ever since they discovered the stock market and Robinhood. It's been working. So they're probably making good money, right? And then next thing you know, boom, they lose all the stocks. They owe on those margins and credit card loans, maybe mortgages against the house. What is that? The second mortgage. And it could be ugly for a lot of people, you know? So, I don't know. Me being a little bit older school with the market, you know, I've been following it ever since 96, but I didn't really start trading in it. I started trading, I think my first trade was like 98. And then I didn't really start trading actively until about 05, somewhere around there, 04, 05, 06. So, you know, I seen it happen to me. I was starting to get heavy. Matter of fact, I think I was buying mutual funds because even though I did put my first trade on, I couldn't afford it. It was like $50 a trade. So I was buying mutual funds and I was getting in heavy in the tech stock boom. And like finding those tech mutual funds. I remember one was called CMG, not the stocks. It was a tech. Anyway, it was kind of like the Kathy Woods of 2000. Thing was on fire. And man, losing all. I mean, I lost a bunch of money in 2000. I lost a bunch of money in 2008. And this last one, I was good. I was totally ready for it. If you go back and watch my videos, they should be there on Dre Trades 1, I think. And I just pulled back a little bit. I thought it was lofty. And sure enough, I didn't think it would be COVID, you know, coming in. But it was like right here. Because remember this run? This run was crazy. I was up 14% in 130 days, 369.12. So 4 months, we was up 14%, 10% a month. And right then, that was right around Christmas. I was like, I'm out. Remember, I was talking about things like, what was it? Bullhorn patterns, what was it? Megaphone patterns and stuff like that. And then, you know, I didn't think it would be the C word. Then boom. So I was ready. My portfolio didn't really take a hit. And I wound up coming back in. I remember right here, somewhere right in the middle of that drop. And then when it dropped and went down as low as 38%, I was like, oh, man, I didn't time it right. But I missed a lot of it. And then here's the run coming back, of course, right? I think I was break even and making profits somewhere around, right around here. And I was like, yeah, that's nice. Anyway, but should have been more aggressive, though. No one knew. No one knew who was going to do that. Right? No one knew. So I don't feel too bad. But yeah, I should have been more aggressive. But anyway, and this is where a lot of people got in on the market. So here, we're up 106% in a year and a half for the most part. So everyone that got in here, and remember, the market introduced a lot of people here. This is when they took all that government money. It was like, hey, I'm buy some stocks on Robinhood, things like that. And they don't know what a pullback is. Even though we had a few, it recovered so fast. If you blinked, you missed it. So that makes me feel that if we have anything sustainable, it could get ugly. Like it could get ugly. It could just like snowball, the snowball effect. Because people won't are not used to it. All the new people that jumped in were just not used to it. They're gonna be ready. Oh, it's 2 days, 3 days. We're down. Let's get in because the correction's over, and it's been like that. Can't blame them. That's all they know. So just gotta be careful. We have to be careful. I don't care how pretty it is or how good it looks or what the talking heads say on the radio or on TV. You just gotta be careful because they flip like a light switch. They'll say, "Hey, it's great. Yeah, I'm buying Apple. I'm buying this." Blah, 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 blah. As soon as it's down 5%, yeah, I'm selling this. I'm selling it. Because these guys, they're traders. And then they'll be like, "Oh, I told you. I told you." No, you didn't tell nobody. No, you didn't. You know what I mean? So they'll flip in a heartbeat. So you just got to learn to be careful. I mean, because it just has never happened before, really. So it's uncharted territory. The higher something goes up, the harder to fall. So all of that, all those laws of physics still apply. They still apply. Okay? So just kind of keep that in mind, I don't know. Jerry said you started trading on a platform called Stock Trade. I don't remember that one. Then Robinhood came out, and then once you started making money, you moved your main money to TD. Good. I remember one of my first videos. Maybe you was watching me then. I said, "Man, you guys got to get off of Robinhood. You just got to, So it's just better to be. This is my favorite platform. Even though I use Charles Schwab, I use it for more of the other stuff. And the thing is, here, Charles Schwab bought TD Ameritrade. Can you integrate the platform here into the Schwab universe? They haven't done that yet. It's pissing me off. Anyway, but yeah, love this platform. It's great. Move around quick. And I've been using it since day one, since, what's his name, invented it. Oh, I can't think of his name. The Tasty Trade dude. Sosnoff, whatever. What's his name? Tom Sosnoff. Is it Tom Sosnoff? Yeah. Ever since he invented it. So I've been on the version 1.0 and watched all the changes and all that stuff. What was I gonna say? Yeah, so you just gotta, if we miss some of it, I pulled back, I pulled off the throttle a little bit, like I said, on my TSP. And I'm okay of missing the next move, because I made so much money already. I don't need to catch every little bit. But I do want to protect what I made, so I'm okay with missing some of that. And I'm still aggressive in my other portfolios, but that's the one I actually pulled back a little bit on. Because I can't really control the stocks in it. And the ones that I do, yeah, I can control the stocks, so I'm a little bit aggressive on it. But we'll see. I could be wrong. This thing could go up forever. The way it is, it'll be up another 100% in, I don't know, another over here, right? About the time we get to mid-2022, we should be up another 100%. That's the average. Can't prove me wrong. And it's got to turn somewhere. Let's say I just draw that trend line, right? And then that is August. Oh, I nailed it, right around August 29th. So now if I measure from the bottom to where I just ended, it's putting us 159% in 885 days. So that'll be a little bit over 2 years. And that would be crazy returns. But I don't know, man. I don't know what's going to be the trigger. There's nothing. I don't know. You know what I think could be? Another version, like find out there's a new virus out there. and then maybe that will be it, right? I don't know. We already know what the one did, so we'll see. I don't know. And then you know what I think? I'm just guessing now. I'm guessing, totally guessing, that because the market finds a way to prove everyone wrong. It just does. So when it does drop 10, 20%, if it does, I got to say if, because, I don't know. It just hasn't happened yet. everyone would get back in because they use, oh yeah, that's the deal. And it don't come back. It don't. It goes down 50, 60%. And then people's like, oh my God, that scares everybody. They're done. They're done with the market. They got to sell their house. They're in huge credit. That's the correction you almost need to flush out all the wannabe traders and stuff. Because that will prove everyone wrong. So just kind of remember, the market finds a way to prove everyone wrong. It's been doing that since the beginning of time. Since the beginning of the markets. and why would it be different now? Now we're proving the market wrong? I mean, it just doesn't none of this makes sense to me. It just don't. Anyway, so that was on the same kick, by the way, pre-COVID. And look what happened. I wind up being right. I was a little premature, but I wind up being right. You said you like Robinhood. I'm just not keeping no real money. Yeah, I still got my Robinhood account. Matter of fact, I was trading in it a couple months ago because they have where you could buy a stock however often you want. I think I was buying a set of stocks. Tesla was one of them. I think ARK was another one. I can't remember the stocks, but I was buying $5 of each every day until I couldn't afford it no more. Anyway, I wound up not affording it anymore, and I stopped. Believe it or not, I went doing that for at least a couple of months. You'd be surprised what you could afford how you can make it work. When you have an expense. I considered that an expense, and I had other bills. I was doing what I can to make it work, working overtime, whatever, cutting this out. I was like, I'm sticking with that. And I knew I couldn't afford it, but I did it anyway, just to see how long I could do it and what I would cut back on to make it continue. It was an interesting experiment, and I went pretty long. I was like, wow. It shows you how much disposable income, like how much we waste. You'd be surprised, that McDonald's every day, the coffee. If you get a coffee every day for $1.50, right? Let me just do the math on it. And you do it for 30 days. That's $45 a month. So just on your daily cup of coffee, so things like that, you'd just be surprised. If you go to, and a lot of do be fast food. If you go fast food and you drop $5 every day, that's going to be ugly if I do the math. $150 on that, or, you go into the movies and taking the family, well, I don't know if anyone's doing the movies anymore, but, it's $100 for a family of, 3, 4? So it just gets crazy. Yeah, that was a good experiment. I liked it. I encourage anyone to try that. Just try to systematically buy stocks. Just try it and see how long you can go before you have to say, forget it, I can't do it no more. Anyway, you like RH? Yeah. So speaking of RH, let's pull that up. Restoration Hardware. I like this one. You can see the breakout. Right? Did it go straight up? We went up 77%. Anyway, we have another consolidation area. So you see what happened here, up, doing it again. So it's just waiting for the next breakout. Here's another one, by the way. Can I get rid of this? Yeah, so you could see a little consolidations. Here is another one, really tiny. It's just doing its thing. And even right here, you have, this is what I like to look for. You have price over the moving averages. Price is basically right there with my 9 and 20. It's like the perfect entry point. So it's something I'm looking at. Tell you the truth, I probably won't take a position in it because I'm like, I got to sell something. I'd be like, now I'm like, damn, what am I going to sell to get into that? So I like that one. You said you think short sellers are attacking Kathy Woods on ARK as soon as they bought, what is it? S-ARK, I think you meant to write. It tanked. As soon as she bought what is SAVA? Is this it? Wow, oh my gosh. I don't know anything about this, so I'm glad you look at the, damn. So she bought this up here. if she did well. I get her little email of the buys and sells, but I haven't been checking it out lately. But yeah, I know they haters with her, and then you got the S arc. Is that a fund yet? Let me see. No, but supposedly coming out with the S arc, short arc, and so um yeah, they just hot hand. She's the hot hand, and for the most part, still hot. I think someone's got to take her out. You're gonna expect to be down, especially being so hot. But let's see what happens. I think she's definitely. Sometimes I just think she's too early. What they need to do is stop publishing their stuff every day. What they doing? Just don't do that. Do it quarterly like everybody else. But that's what she wants to do. She wants to be transparent. And I don't get that, but that's what it is. And I think that transparency is killing her. I definitely would stop that. Let's talk about Shake Shack, another restaurant stock. Hitting right there. It broke the trend. It's right there. It's right there at the buy point. But it looks like it wants to not be a buy. But you got to see what happens. Oh, I know what stock I want to look at. Open. Let's look at Open Door and then Zillow. Because I'm liking what's happening here. You got your double bottom with the Open Door, and now it looks like you're getting some strength. It looks like it's finally beginning to do its thing. Now, if I remove all these drawings, zoom in on here, right there. I think if it can break that level, it's off to the races. I don't think we'll revisit down here. It failed here. You see what happened, and see what happens again. We're right there. Something to keep an eye on. Let's look at Zillow. Right. Here's another stock that's the market's just ripping, and this thing's down 55%. In 200 days. Yeah, about a year, a little over a year and a half, I should say. And is it going to hold here? It looks like it wants to. Looks like it's right there. So you can see how we hit that level of support. Not bouncing hard. It just bounced. It's like, and you can almost get into this and just that be your out. If it breaks that, and just get out. But this could be a pretty good entry. You can see how it's way oversold. Look at the stochastic. It's just pinned to the bottom. So maybe something you can get into. You said ARK was the only one you was in, but you out. How can you have 5-year outlook? But that's, I the same thing. I'm like, I don't get that. But if you look at the sells and the buys, it's minuscule. It's like, 0.3%. It's nothing significant. So what I think is happening is that she's just maybe raising cash, turning cash to maybe buy other things, just so, and I don't get it. Yeah, 5-year outlook, but just selling stuff. And I do understand that she'll sell if it starts to be a bigger part of the allocation. So like you'll sell Tesla if it goes up too fast because it's now, instead of 10% of your portfolio, it's 12% of your portfolio. I get it. But Tesla could be going down. I'm just using that as an example. Tesla could be going down for the last month and a half. And then you see a sell. And it's like, it didn't go above your allocation. So why is that being sold? So you see things like that. But I don't get it. The only thing I look at those positions and I say, well, it's minuscule. So maybe, just little percentages here and there. Let's see if I can bring it up. Is this yesterday's? Yeah, I can't really bring that up. Yeah, I can't really pop it out. over here. I'm looking at because it's like stuck in my email, and I'll be showing y'all other stuff. So I can't bring it on screen, but let me see. Let's see something if I can read down. Like in the ARC, she had 3 buys. This is actually small. 3 buys, 2 sells, and the 3 buys are this 0.04% of the 0.02 of the position, 0.0007, right? That's the buys, and then the sells were 0.02 and then 0.0076. So very small. And then in everything like in the ARQ, 1, 2, 3, 4, 5, 6, 7, 8, 9 buys, 1, 2, 3, 4 sells. And not one of them is over 1%. Matter of fact, the highest one appears to be 0.3%. So that was Atlas Crest Investment. Let's pull that up. ADIC? I need my glasses. Big time. Maybe it's ACIC. Yeah, there it is. I can't read. Wow, she bought that. I don't even know what they do, but that just like she has belief in that one. Pull up the daily. I can't even sit. It's just pinned. Here's the volume coming. That might be her buying. Generally, though, when you see stocks like this, and let me see what the volume is on this. The average right now, today's volume is 500,000. When no one's trading this, when you see volume, when you see a stock like this and it's just pinned, just going sideways, and you're trying to do everything you can to even see it. Anyway, when you see volume just popping up out of nowhere and the stock really move, that's generally a good sign to get in. Generally, volume, supersedes price. So you can say, wow, okay, something is happening here. And you might be able to get a play and get in. The next thing you know, the price will just start spiking. So it could be something there because of this, but I don't know. She's not buying it because of a chart or anything like that. I know they into the fundamentals big time. So I don't know. I don't even know what this company does. ACIC. I'm going to read about it real quick. ACIC. Look at that, just nothing. Anyway, does not have significant operations. It focuses on effecting a merger, capital stock exchange, asset acquisition, stock purchases, reorganization, or similar business combination with one or more businesses. The company intends to engage in the business of designing and developing electric vertical takeoff and landing aircraft for use in urban air mobility that can carry passengers for 60 miles at speed up to 150 miles per hour. So I guess that's kind of the future. I guess that's what she's buying it for. Because if they're successful with that, look out. They can fly people for 60 miles. If we're vertical takeoff, it's kind of like being carried with a drone or something. I'm picturing urban air mobility. I mean, these companies be coming out, and I'm like, is it really possible? Did I just close my YouTube? No. Is it really possible to do that? Do they just be coming out with impossible shit saying this is my company? Like me and you, JR, we could start a company, and we could say, yeah, we're in the business of extracting all the clouds in the sky and then turning it into water for, very fresh water. So any clouds out there, we could just get all the water we want. Unlimited water. Because we would just pull them right from the clouds. Cloud extraction, we call it. Can you just, and it's impossible to do. I mean, because look at it just reminds me of, what's the car maker? Not Neo, not Tesla. Oh, shoot. The dude that rolled the truck down the hill. Do you just have to do things like that to to sell your company, and then you get the money, and then you try to be making a company, So we could pretend. You just pretend. You just fake it until you make it. You said they agreed they should stop posting their trades every day. Yeah, man. Yeah, they just gotta do it quarterly. Is the regulation. Just wait. I don't know why they want to do that. But here, if I zoom in on that stock, I'm telling you, this makes me want to keep an eye on this though. It's nice and cheap. But I mean, if they really do what they say they're gonna do, this thing would be, it'll, change the world. It's like a change the world kind of thing. Anyway, so that's that. But yeah, so that's enough of talking about her. I'm trying to get any other stocks you guys want to talk about? Nikola, that's right. Didn't that guy go to jail? He's like looking at charges, right, for fraud and all kinds of stuff. Nikola. I said Nikola. Yeah, there it is. Basically at the all-time low for the most part. It almost looks like that chart we just got done looking at. What did I say it was? Something DIC? Sorry. Pull up my email. All right, let's look at that. That's Nikola. And here's ACIC. It's a new company, so you just got to expand it out. And it's almost the same chart. You see what I mean? So that's interesting. An interesting note. Might saying that, ACIC could be full of shit like Nikola. Anyway, but yeah, how long? I mean, I don't know. Well, the FAA just let drones pick us up and fly us around down the block? Because basically that's what it sounds like. Will they let us do that? And I don't know. That's some true Back to the Future shit right there. Remember Back to the Future and the cars just kind of take off and you're flying around, about 100 feet in the air? That would be incredible. Oh, I'm going to talk about Crowdstrike because they report earnings after the bell. And I'm a little nervous because I'll tell you why. Because it's a big position of mine. That's number one. Number two, it's broken out. Gosh, can't draw it. It got the breakout. It's happening. That actually makes me feel confident. But where I'm nervous is nothing's really broke out. The breakout, it's very few stocks that finish this pattern that just continue to go up. And generally you get this, and then it just falls back down, like what happened to Amazon. So tomorrow, because I think they report after the bell today, this green candle that we see, let me draw the monthly. You can see it better. Zoom in here. Let me draw the thing here. This green candle, it's a nice breakout candle, will easily, oh wait, this is going to paint because today's the last day of the month. But let's say it was one more day in the month. This will be red and there'll be a long stem and then the action will be down here. It will kind of look like AMD, right? It'll look like that, If I let me draw the weekly, you can see what I'm talking about better with that. Is it AMD I'm looking for? I could have sworn that was a bigger stick. Oh, the Moderna. That's what I'm sorry. Yeah, it would look like that, So I'm like, that's what got me worried. Because at one time this was green. This was solid green, right? And then it just sold off and it became that upside down stick, upside down hammer. Just ugly. Just turned the chart from 100% positive looking to 100% ugly in one day. And will that happen here? So that's why I'm worried because everything just rolled over. Amazon was one of them and you could see the breakout, right? And just rolled over. So I'm thinking they may do the same. But I'm willing to hang in there because I already got great profits on it. And they're leaps. I'm in the leaps. I got another 2 years. So as long as it, makes a comeback, does something like an Amazon. Look at Amazon, up 30. So it's great. So yeah, as long as it's doing, it comes back and it just doesn't, tank, continue to go down like Zoom. Let's look at that. Heard how ugly that was. Down 16%. After hours, it was down like 8. And it looks like it's just extending that. Look at yeah. Oof, goodness gracious. See that gap? Look at that gap. One day this would fill. Okay? One day this gap will fill. But it doesn't look like it's trying to do it today. Okay? It ain't even thinking about filling that gap. That tells me lower prices, right? It's just lower prices to come. Probably comes down to here. This is another stock, if you want to look at it like that. Like, see the trend. You see how it broke out of the trend, right? And now you're like, all right. People probably got excited, finally broke out of that downtrend, and then just gave it up. So it's back down in the range. Right here, I'm draw a little line. And little support, right? Maybe it comes down to here. That area. Gotta push it up a little bit. So 270 or so. But yeah, I think they reported they had a bad outlook, if I remember, but they reported like great numbers as far as income and revenue and stuff like that. But I think the outlook wasn't good. Yeah, that's Zoom. Some of those other stuff like Teladoc. Haven't looked at any of these. Look at that. That looks like it's ready to break and head lower. It's hanging on there. I mean, that's like the last support for a long time. It's just hanging on there. And let's look at DocuSign, new high. So that's the real winner of of those kind of stocks. And I could see us always using DocuSign. Matter of fact, DocuSign was doing good before the last year. Excuse me. I mean, that's how I find. I only use it. That's how I sign my rent documents. DocuSign. See, I got a little megaphone pattern being drawn. But that's what it looked at. SPY looked like just before it broke out, and it just went insane. Right? Just kind of threw that megaphone pattern and just threw it away in the woods. Watch this. I'm going to pull up that. I'm going to draw that pattern. Let's pull up the SPX. Damn, I hate when my charts do that. Let's clear everything out. And you remember I was, I think this is what I was drawing. Yeah, I gotta scoot that down. It's more like that. And that's what happened. Right? And it was really kind of supposed to do one of these numbers. But look, so much for the megaphone pattern. I don't follow that one anymore. So if you go back to DocuSign, and you can see maybe it does what the SPY does. Maybe it just continues to go up. Or we can go back here and maybe this thing says, you know what? It is a megaphone pattern and falls way down into the range. So I don't know. But that's what I was actually looking at this. I think this was the line. Yeah. Hold on. Let me clear this out because this is interesting. I'm going to remove that drawing. And it was like this before March last year. That's what I was drawing. And you can see how we hit here. And this is right. I just got done saying about, 40 minutes ago, I said, I got out just before the March whole, that whole thing happened right there. And then I missed some upside. And then boom, look. It was this pattern that made me say, I'm going to take a chill pill. It was this pattern right here. And look, we went right. Well, you know what? This wasn't drawn yet, so maybe that wasn't. All I know is it was something like this. I remember this trend, and I remember going up. Maybe that's. Hold on, let me pull up the monthly. Let me pull up. Yeah, okay, I see it. Let's remove that. It was this. It was from there. I think it was something like that. And so right here, you see how crazy. Look how crazy that looks, by the way. Just take a look at that. Right? So you know how we was talking about blow off tops a while ago? Maybe this is it. Maybe this is it. This is the blow off top. Anyway, so you zoom in, and then that's where I got out. And it was about 2 months. I was missing some of the action. I'm like, hey, maybe I'm wrong. And then sure enough, it just came. And I was like, wow, I'm right. And right about midway is where I bought back in. Somewhere around there. And I was like, oh, I got in early. Damn, I could have been, portfolio could have been up nice if I would have waited a little longer. But, yeah, it was that pattern. So we'll see what happens. It proved it wrong. I guess you just chuck this pattern out the water. And, you know, that's what I'm all about is patterns. Don't do fundamentals. Just kind of look at patterns and history and stuff. So like we was talking about Crowdstrike. And that's why I'm nervous because everything, it hasn't been too many things that broke out successfully. I think Nike was one of them. Nike, you know, was perfect. You can see the breakout right here. Right? So Nike did its job. That was the easy one. I'm trying to think of some more failures. I can't think of them anymore. I haven't been doing videos. But there's a bunch of them. I did a video on all the failed breakouts. I forgot it. So yeah, you got to go in my library and check that out. Look at all the failed breakouts. But it's a lot of them. So I'm hoping that's not another one. Just hoping. You said your $40 Neo calls looking good. Expire October 15th. Let's check it out, man. How much did you pay for them each? It's $40. Oh, this thing is, okay, you're right there at the money. Trying to draw. All right, there's your $40 mark. There's a lot of action in there. Yeah, that one was a little bit hard to read. Yeah, it looks like it's hanging on to support right here. So you have this area here, right? And for some reason we didn't go to the. Well, yeah, maybe we did. Yeah, right about there, and you have some overshooting going on, but it quite almost made that support. Right, so it looks like we should bounce here. Let's see how this holds on. I don't know though. I don't know if it's gonna hold though. Because look at this. I'm gonna draw that line. Let's clear everything out. Hold on. Clear drawing set. Yes, go away. Let's see something like that. And then of course like that. So there's your channel for the most part, and it's a downward channel. Let's see, right where it's at it's like sitting right on support. So is that going to hold? Otherwise, it could kind of trend towards the bottom of that channel. So you have to be careful on this one. Just kind of note that for the most part, since late last year, the channel, it's a wide channel, it's been down, right? And it's sitting on support. Hopefully it holds and breaks out. Let's hope it changes direction of this channel right here, right now. You know, so but if it doesn't, if you start to see lower prices on it, Just realize it can possibly go down to here. Maybe I drew that bottom line a little bit. Maybe the bottom line should be something more like that. Maybe clear this line out. Right, so yeah, just kind of keep that. That's how I see it. Stochastic is still heading down. Don't have a lot of volume popping in. This is the end of the week. This is really interesting. And it's good that it's actually up 3.5% because it is doing that. Oh, I'm sure I can't even draw. Look at the volume today. Where's the volume? This is not today. This is the week. Gosh, I'm sorry, I'm jacked up the charts. Right, so this is the end of the week, and it's like the lowest volume ever since way back here. So generally, that means the action today, well, the action this week is fake. So let me look at today, because today it's popping. Yeah, it's decent volume. Yeah, it's decent. I would like it to see a little bit higher, but you got another day and a half, another hour and a half. So yeah, but the weekly volume, what the hell is going on here? Look at that. Can y'all see that? Right there? I gotta actually bring that in. Like, yeah, my charts are jacked up. So I don't know what's going on there. I have two volumes in one. And I don't know how to get rid of it. I done messed it up. Anyway, I done messed up my volume. So yeah, that's what I see. Good luck on it though. I mean, I'm not gonna say it's not gonna work, but this could definitely be a low. You know, let's see how hard we bounce. Well, you see a bull flag. Oh, you're looking at the whole pattern as one. So you're looking at this, right, as the flagpole. Yeah, that could be one. But it's really, I don't like the angles of that flagpole versus the flag. But no, it's a flag. I guess I can see what you're seeing. But if the pennant has longer to be a pennant, it can bring you down. Right? So if the pennant kind of continues being this pennant, they could kind of come down here and then blast through. So that's a possibility as well. But yeah, I mean, I guess you can call that a flag. It's really tilted. I like to see flag patterns a little bit more upright and a little bit more not as long. Like this flag pattern we drew here. If this is what you see, is a year in the making. So that's I don't necessarily like them to be that one. Now here's one here possibly, but I don't like that downward. I don't like that angle either. But reading charts and stuff, like, it's an art. So everyone's kind of like different, so I'm not saying I'm right, you're wrong, or whatever. It's just kind of the way you see things. So yeah, you got to definitely put the play in. But that's my opinion on what I see and how I play it. Yeah, all we can do is see what happens. I like getting in, and I'm not saying I do this all the time, and I'm going to look at the stochastic because I don't really talk about it enough. And it's why I have it on my charts, because I really like the action and how it, and when I like getting in, I should say, I wouldn't say like getting in. Well, I do like getting in, but sometimes I'll get in premature. But what makes me feel good about getting in, more comfortable about getting in, is when this thing starts pointing to going up. When you see that turn, or you see the moving averages, wish I could make that bigger, getting closer, right? And you can see it about crossing each other to turn to the upside. then that makes me feel a little bit more, okay, yeah, this looks like it's turning, blah, 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 blah. And I'll use an example, and that's going to be right here on this turn, right? So this bottom is kind of similar to what's happening right now. I got to clear all this stuff out, right? This bottom is similar to what's happening right now, okay? And you see the action down here is different. You see how it's turning and it's starting to go up. So I would have felt better here than this one that's still pointing down. So, you know, that's me. I'll kind of zoom that up like that. So this one did a little bit better prediction, and the move up wasn't the greatest. Let's see. Actually, it was percentage-wise. Take that back. Yeah, it was nice. Damn. I guess I got it stretched out. Talking 70%? 33? Yeah. So 70% move that one predicted. This one, I just want to see it turn. I want to see it cross. So be careful. And I don't, I'll get in still when it looks like that. And it's not 100%. It just makes me feel good when I get in a position, and that's starting to point up with it, with the moving averages crossing like here, right? It makes me feel better. But no, I've been known to go ahead and get into something like that, and you could get in early, and then you'll see this cross. You'll see, because this is delayed, right? This is priced. This is printed based on what the past, based on the past action. It's not like a future indicator. But I think I have mine displaced a little bit, my stochastic. Usually a couple of days to kind of shift it in line. If your charts let you do that, yeah, try doing that. Just play with it a little bit. You said you're rolling over every 3 to 4 weeks until it pops. Rolling it, you see it downward moving. I see it. You're rolling over. I got you. And Nvidia 40. I got you. Good luck. Yeah, I know you don't like, I still like the spreads. Like, let's say, I know when you spread it, you don't really get the action. But to me, you just got to buy more spreads. So, like, I would do, let's say, that 40 and sell the 50, let's say, right? And, of course, if you just bought the 40, that's probably be right around a 50 delta, because that's where it's trading. So it'll be a 50 delta. But if you spread it and you bought that 50, if you sold the 50, you're kind of turning that 50 delta into maybe a 10 delta. So therefore, now, of course, you cheapen the price as well. So therefore, buy 5 of them, or whatever amount it takes for the whole position to be a 50 delta. Right? So now you kind of got the same price action, but now you have some protection. So if it starts going down, I should say not the price, the action on your money for the most part. So if it starts going down, you can almost start peeling off some of these and getting deeper into it. You can start buying these 50s back, because these 50s are going to be making you a lot of money. Right? And then, so I kind of like playing it like that. Like lately, I rarely buy the straight call, but of course, if you're right, it's lovely. You're gonna be hitting some home runs, boy. But try something like that. Like if you spread it, like I said, I know you lose that power, but you cheapen the trade. But just buy more of them, right? So you spread it, and instead of buying that call for $4, if you spread it and you bought it for $1, well, just buy four of them. And it'll be $4, and you'll have about the same delta probably. But now you got some things you can work with when it starts going against you. You can kind of be making some money up here, right? So, and then if you peel them off, you're slowly peeling off these 50s. You're buying them back as it's sinking. And of course, the position is getting bigger now. But if it starts to pop again, you will make your money back so much faster, and then some, because you made money on the downside, and now you're starting to make the money on the upside. And yeah, I like that. That's how I kind of trade like that. A lot of times also, like, I just got into Roblox, by the way. Let's type that in. I didn't even talk about that one. It's one of my secrets. the leaps. Let me see. I'm in the leaps. That's all I talk about. See, I got my little downward channel too. But if you pull up the monthly, yeah, I'm just believing in it. I like the pullback that we got. It's down about 30% from the high. And so I'm like, okay, I think maybe it'll turn here. I don't know. I just got in. So no real trigger to put me in. I just wanted to be in the space. No trigger point. It's like, okay, it's discounted now. I'm going to get in because I really believe in the space. All right, so that's my reason for getting in. But gosh, I was going to make a point. Oh, okay. So it was trending down. What candle did I get in on? Let me see. I think here? No, maybe here. I don't even remember. Yeah, I think here. Anyway, so I wound up buying because I'm in the 115s. I'm in the out of the monies in this. And like I said, it's only because this is down, right? I'm waiting. I'm hoping it bounces back, starts to get to the highs and then some. So I'm in the 115s, 130s. But to start that position, is this the position? I hope I'm talking about the right position. I was like in the 105s. You know what? I'm talking about the wrong position. I was talking about SMH. I'm in the SMH as well. And that one, I'm in the straight 115s. That roadblock's the straight 115, 130s. Straight. I ain't doing nothing special. But this one I did special. Because, gosh, is SMH priced like that? Anyway, I forgot what I bought. I bought like a 270. I can't even remember. 300. Yeah, because I'm in the leaps. I went out of the money on this one. The 300s and sold the 305s. Expecting for that pullback. What I really wanted is the 300 straight. I just wanted the straight call. Because of the breakout, I was liking the way it was looking. I like the consolidation here. I like the space of the semis just being not enough of them, right? So I'm liking this. So I was going to play the straight call. I generally don't do this. I've been doing it a little bit more lately because of just this powerful damn market, but it still scares me. So what I do to help me get into position, and I hope you understand this, I buy the 300, 305, way out. And if I'm right, if the stock continues to go up, it's all good. I think, I'm still going to make money, but the 300 sold to 305. If I did that for $2, I'm going to make the other $3, right? If I did it for $1.50, I'm going to make the other $3.50. But if it starts to go down on me, now I can buy that 305 back. Because I really wanted the 300 naked call to begin with. I almost pray that it goes down. So it's like me, I get in the 300 cheaper. So if I get in it, it starts to go down. Let's say I sold that 305 for $2,000, and then it goes down. Now it's $1,500. I buy it back. I made $500 on the downside instead of just buying a straight naked call. And then now I'm comfortable with the naked call position, and then I kind of ride it back up. So basically, I was getting a tight call, a tight spread, a tight bull spread, tight 300, 305. You're just to buy one and sell the next one right above it. If it goes up, it's all good. You can always just buy more. You can just, if it goes up, you're going to make money. But if it goes down, you have an opportunity to buy that short call back and just be naked long the way you wanted the position to begin with. That's been working a lot out for me. A lot. And I really like doing that. That's how I enter for the most part, a naked call position because I don't think I'm going to time it right? So I'm like, I just buy them both. And if it works up, if it goes up, it's all good. Yeah, I'm not as long as I could have been. But if it goes down, it's even better, So what do you think about that? I hope you understood what I was saying. You said you got some January 2023 Neo call debits. Okay, cool. So you're doing that leap thing. Yep, and just kind of set it and forget it, right? You could be wrong now, be wrong next year, and then it turns your way, and then it's all good. And like I said, you always have the option to go ahead and dump that short call that you bought. Because if it's not going your way, that short call, you're going to be making some money on that. And you could just dump it. Say, you know what? I made the money on the downside. The stock has got to turn pretty soon. So now I'm going to try to just be long and make the money on the upside. And once you do that, if it's stock still, once you get rid of the short call and the stock's still going against you, then now you can got to consider maybe I got to get out the whole position or just hold it because you made the money on the downside. You made some of that money on the downside. So it's not really a bigger loss as if you would have got into the naked call to begin with. So, yeah, that's how I kind of, I work around the position of some of those out of the money spreads. Sometimes it works out. Now my biggest loss, oh my gosh. I regret it today. Even though I made a lot of money in Chipotle, I'll talk about it. I'm talk about it right now. In this area, this thing was chopping around, and I had the 1,500, 2,000 call spread. Remember I said I got the 1960 2,000? Well, I bought back the 1,500 and bought the 1960 and took that profit. But I had the 1,500. I had a 500 point wide spread. So you can imagine how much that cost. So I think that short call, the 2,000, I sold it for 10,000. All right. And I don't remember what the 1,500. I sold that one for 10,000, the short call. Anyway, that 10,000 call winded up being worth $4,800, somewhere around here. Right? I made $6,000 on that call. And I was like, and by the way, I put the position on somewhere around here. Somewhere, and that wasn't even, I didn't even have it that long. And I was like, oh man, damn, I milked that for damn near, I almost got the whole thing. So I needed $4,800 to buy that call back. I wanted to buy it back in the worst way, but I would have had to sell something to do that. So I didn't have anything to sell. I didn't know what to sell. I'm like, oh my gosh, I need to buy that back. I need to buy it back. You got to buy it back just because you made, if that was a position by itself, you made $6,000 on it. So I'm like, all right, I didn't buy it back, by the way. I'm like, oh, I didn't buy it back. Anyway, let's go see how much it costs. Let's just go see. It was the January 2023, of course. Let's go to 2000. There. Now that position I could have bought back for $4,900 is worth $22,000. And that's what I gave up on it. It was going to be my biggest trade of the year, and I didn't buy it back. So I had the 1,500. I would have kept the 1,500 naked, by the way, right? So I bought the 1,500, sold the 2,000. So I would have bought this. I would have had this naked, and this one call right now is worth $50,000. So yeah, I forgot what I bought it for, but it wasn't $50,000. Because if I don't know what I bought. I wish I can remember. But basically, for not buying it back, it wound up costing me maybe $20,000. So I was really disappointed. Yeah, for the most part, you just gotta minus that $4,000 from this $24,000. Yeah, so about $20,000. And then when I was debating that, when I was trying to do it, figuring out what to sell, and I didn't figure it out, the move started happening right then and there. And let me go to the charts again. So it was somewhere around here. Let's go to the dailies. And you can see what happened. It was somewhere around here, I think. Yeah, it was $1,300. That's when that $2,000 call was worth that much. So right around here. And then the stock just exploded. It went straight up. I was so pissed. I'm be pissed off today. So anyway, I had the position. Still got it. And when it came up to somewhere around here, 1850, that's when I bought that 1,500 call back. And then bought the 1960 instead. So it was a small position. Now I own the 1960 2,000. And that's basically how you take profits off that spread. And I put a lot of cash in the account. And then I bought other stuff with it. Okay. But yeah, man, this year, man, that trade, the Nvidia trade, and the Google trade are 3 trades that I was in, and I totally effed it up. 3 times. One of those trades would have been enough profits for years, and I just messed them up for being scared. The Chipotle one, I wasn't scared. I just couldn't figure out what I liked. Everything was popping. I didn't want to sell anything. I was like, oh man, what could I sell? What could I get rid of? Now I know. It was a learning experience, because if that happens again, where I just basically drain that short call damn near dry, to me, you have to buy it back. And to drain it dry, that means the stock price dumped on you. And if you was long the position, that means you feel kind of bullish on it. So most likely that it's going to pop back up. So I gotta find something. I can't just say, I can't figure. I gotta find something. I gotta sell the weakest link, and that's my lesson that I'm gonna be doing from now on. I'm not gonna watch a short call just get disintegrated and not buy it back. Anyway, that's what happened. Anyway, so you want to please? You want me that my retirement play? If it pops, I'm retired. Cool. Yeah, I got some retirement plays, and one of them is Crowdstrike. I'm pretty deep in that, so I got to keep my fingers crossed. One of them is Walmart, which I'm disappointed in. I won't call it a retirement play, but it's an almost retirement play. And I need this thing to get to 155 in the next couple. It's just, this is the slowest trade ever. Walmart just does, I don't know. The other one is Snowflake, by the way. And this one has been doing, look at that, man. This one is great. This one's great. I got into Snowflake somewhere around here. Somewhere around there. Or maybe a little higher, because I seen it popping. Maybe it was this candle. Yeah, because I even got a circle there. So maybe it was this candle. But it was right before this breakout. So it was trading at 250. And what did I was like, what could I do? Anyway, I wind up selling. I'm way out in the future now, the calls. So I think I'm in the 350s, 360s. And I got 40 spreads on the Snowflake. And I think I bought them for $2 on the cheap, man. I think it was like $2. So that means about $8,000 position or something. Anyway, it ain't worth that now, because this thing is moving right along. I need 50 more points in the next 2 years, and then that thing will mature. I think it's going to be I think that's going to be like a $50,000 trade as well, if it matures. Everything in the money. So, yeah, just by spending 8. So, that one is working out lovely. And I don't want to jinx it because Snowflake, it's, it looks like the down is over, but this thing could turn. They come out with a great earnings report, and you can see that volume right here just peaking off the charts. Great candle. Look, it's even up today, 2%, 6%. It's still riding the momentum from that earnings report. So you got to love it. So those are the 3 retirement plays. I mean, if you want to call them that. Snowflake, Crowdstrike, and Walmart. I like that. I like that term you got, retirement play. And I think every portfolio needs a retirement play. By the way, I got some in crypto too. I got some retirement plays in crypto. All right. So, yeah. But yeah, you need that. I like that. I like that term a lot. Retirement play. Yeah, you could do that with leaps. Today is the last day of the month. I believe, let's say, what is that? Like Amazon. I think Amazon. No. There's a lot of stocks that only go up to Jan 2023. This one goes up to June. Okay, dang, I can't even think of them. Let me see. Let's do Crowdstrike even. Yeah, here's one. So Jan 2023. I believe tomorrow we should see the next leap. September 1st. So, because I don't like 507 days. I like a little longer. So you can see some positions like you can go to IWM. You want to put a nice trade on, but go to the IWM. Look at IWM goes out to December 2020. 836 days away. I like that. Okay, because those are the trades you can really do set it and forget it. You know the IWM is going to be higher from now in 2 years. The possibility of it not is really slim to none. The stock market would really have to roll over. So, I could put those plays on where I make 50% a year for the next 2 years, or if I want to be more aggressive, even 100%. So yeah, I like that. That's 836 days out. And this is, you could buy if you just want to be long small caps, maybe if you got, say you want to buy the 80 Delta, right? It's because you're $6,500. That's not bad to be long the position, an 80 Delta for the next 2 years. Especially when you got that consolidation right there. Look at how I love the way the small caps is looking. That's the weekly, right? Consolidate. This can roll over though, even though I always love that. You see that pattern. And this thing's been bouncing perfectly in there. If y'all got anything from me, y'all know I love the sideways action. And for the most part, you can probably see that I'm right. When you see these things consolidate like that, they're going to explode. But it also could explode to the downside. That's the one thing. But since the market's just going straight up, they all explode to the upside. But see, it's right there. It's priced right on the moving average. It's perfect. This is a perfect entry for a long-term IWM play. But it's just, I forgot what I was going to say. Yeah, look at that. That's the monthly. So you had to straight up and look at this sideways for a year. Most likely, this is going to pop and continue to go higher. But who knows if the market rolls over, though. This will, too. It takes everything down. It's people, they throw out the baby with the bathwater, right? So, yeah, everything will come rolling down. But then there'll be a buying opportunity. Right there's your support. Can you imagine if IWM dropped that much? That's 20%. It could. That'll be the bear market. You posting your Q plays on Twitter. Check it out. I do. I think I got your alerts, man. I think when you post on Twitter, I think it come right to the phone. And I don't got many people like that too. Maybe just 2 people. So you're one of them. All over the place with the Neo. Oh yeah. So I'll check you out. Me and you, we definitely trade different. We won't necessarily put on your trades, but you definitely gotta find what works for you in this. And I've been saying that from the beginning. You gotta find what works for you, especially with options. You can't follow somebody. You can maybe take a couple pointers or 2, but because you just can't. I find it does not work. You gotta find what you feel comfortable with, and then that'll make you a better trader. And I suggest when you're getting started, take a little tidbit from this guy, maybe this guy, and then use those puzzle pieces to create your own puzzle. And then you'll be like, oh yeah. You gotta find out where you feel comfortable and trade. Because that's the thing with the options, you definitely gotta feel comfortable because they will test you. Remember, a 30 delta, especially when you're selling puts or even calls and you're selling them, a 30 delta, if you sell a 30 delta, it means you got a 70% chance of being right? So yeah, you sell a 70 to 30, got a 70% chance of being right. But it also means that you got a 60% chance of being tested. And how you know that? You generally just double the delta. You got a 60% chance of being tested. And when you test, are you gonna sell? You're gonna buy back and lose money? Or are you gonna hang in there? It's tough. It's tough being tested. especially the bigger your position is, the tougher it is. You're like, no one wants to get tested. It makes it just messes you up. And if you're not comfortable in your position and you're getting tested, you'll mess up. But if you're comfortable, like you can hang in there and be like, man, it's going to pop. It has to pop because it just, the numbers, the math behind it. And a lot of times that's true. So you just got to find out, what works for you. What was I getting ready to say? I'm lost for words. Oh, testing. So like if you sell the 80 Delta, of course you got a 20% chance of being right. It's basically a losing position. But you also got 160% chance of being tested. You're gonna get tested if you sold like an 80 Delta. I know that's like in the money, but you know what I mean. You're hoping that it gets out of the money. Yeah, that's that a lot of people don't talk about the probability of touch. That's something to always be aware of. Okay, I'm just looking at what time is it? 3:06. All right, y'all. I'm looking at, I'm just sitting here looking at this IWM and I'm liking it a lot. I'm like, damn, I gotta get long this. Maybe I'll just dump the TSP all into the small caps. Looks like they're about to explode. Look at all the tails. And that's what I like. I like looking at that. Like, and my phone, what the hell's wrong? My phone's blowing up. See all them tails when it dumps, it just, all the buyers. To me, there's buyers coming in. Buyers. Man, my God, I just got a whole bunch of messages over the phone. It's like my phone has been, like I didn't have internet on it or something. And it just kind of got internet. Beef price up. Live Mint. eBay. I'm trying to buy some washing machine parts. Sorry I didn't have a picture. Take a picture! Oh, scrap last week. Maybe your local appliance store that sells parts could tell you if the part number was sold as a replacement. Please make sure I work on your washer as it's a lot of connections doing different things. Yeah, I know. All right. So that's it, man. I guess I'm going to go ahead and end the video. I want to do a long video, but I'm actually getting tired. I'm so tired of sitting. But just be careful. That sums up there's a lot of things that's down, even though the market is ripping. There's a lot of things that's not ripping or just ready to rip now, right? And we talked about Amazon being one of them. I hated it, but now I'm kind of liking it again. I'm really surprised that it's really pushing up so quickly back to the top of the range. What was I gonna say? So even though the market's ripping, there's a lot of stocks that's not ripping, and I like those stocks better. So and just be prepared, man. There's nothing that predicts a correction or even a crash. Nothing. There's no prediction. And when it happens, it just happens. It catches a lot of people out there because it happens fast. Like, we could be down 4 or 5% this day. And then next day is down another 5%. So now you're already down 10% because you didn't sell it the other day. It's like, oh man, down 10%. Oh, you're getting scared. The next thing you're down 15%. No, it goes. It's like in last March, it could get crazy, get ugly. It can get ugly quick for no reason. It doesn't have to be a reason. That's when we was talking about the 86 or whatever, and even the 2029. It doesn't even have to be a reason. Just do it, but today it seems like it needs to be a reason. Everybody thinks, the forefront, everything looks good. Everything looks good out there, so we're good. Another way you can see there, right? Consolidation, up, consolidation, next leg up. Generally, the next leg up is the same as this leg. Right, so we can go from the top of that to the top of here. Wow, that's 68% in the year. So can we go 68%? maybe. That puts us right about here. Shit. Right, so I can draw that. Wow, that's like almost a straight up action. But yeah, so I am not saying it's gonna go that steep. That line was accident, but this is the level that we could reach. It might go something, might take this route, might take that route. I don't think it takes that route. So, but yeah, that's the level before the next consolidation when we get the breakout. So check out IWM, man. Now I'm looking at it, I'm thinking about throwing my money up in there. I think I might play all short small caps on my TSP. Of course we got the small caps, we got the SPY, and you can see how that looks. I'd rather probably be in the small caps, maybe 10% in that or 5%. And then what's the other? Oh, the international for the most part. I guess that mocks the EEM, and you can see how that's posed for a breakout as well. Look at that. But damn, it just got back. It looked like it. You see how it was in a range, and then it looks like it collapsed. Move this one, and then now it's trying to get back in there. I'm like, oh, that was a mistake. See, all that buyers came in there and swooped that up. So yeah, and I'm liking that one too. So yeah, and the reason why I did that, there's your double top, all the way back from 2008, 2007. So it looks like, yeah, we being primed to break through that. So yeah, that could be where the action is. I mean, I tell you what, EM, once that COVID goes away and it starts getting better around the world, these EM stocks should really rip. And I think that's the only thing holding it back, is they're not as good as us. How, we're not the greatest, but they're not as good as us as far as being VACCINATED. Yeah. Anyway, all right, man. Hey, JRH, it looks like it's just me and you, because nobody wants this info. It's just me and you, man. So that's why I follow you on Twitter, man, because you solid, man. You hanging in there with me. Yeah, so yeah, keep posting your trades and whatnot. I be checking them out too. I'll like get on the computer if I remember, because generally when you tweet, I'm like at work or something, and I'm like, oh, okay, you doing that. Then when I get home, if I remember, I'll kind of pull up the graph or whatever, see what you're thinking, try to see how you're looking at it. But yeah, man, good luck. I'm glad you're doing those retirement plays. Glad you got some leap action on. Like I said, it's slow, like it's slow motion, but it's solid to build growth in your portfolio. Using options, because you don't have those huge losses. You can, it's options still, but you have time. You be like, oh, you know what, this ain't gonna work. Let me get out of it, and you didn't really lose that much money on like a short term. But like, let's say this Amazon. I'm just gonna use this as an example, and you bought this is trading at say 3,500, and you bought the 3,600, 3,700 2 years out. Now, if all of a sudden Amazon just goes ballistic and all of a sudden it's trading at 4,200, your spread still needs time to mature. And you're not making the money you could have made if you would have sold one maybe 90 days out or bought one 90 days out. So that's what sucks about it. But at the same time, if you sold the bought the 3,500, sold the 3,600, and it's trading at 4,200, for the most part, that trade is locked. It's you gonna make the money. You could probably let it expire. If you let it expire in the money, of course, both sides will get exercised. You won't even know it. It'll happen Saturday. You got the shares from this guy, and you immediately sold it for this guy, and your account is even on Monday. So, it's always cool if both legs expire in the money. You don't want one leg to expire in the money and the other one don't. Then your account's in trouble. But they either can both expire worthless or both expire in the money. I wouldn't let it get that long anyway, but sometimes I had. And then, yeah, you definitely don't want one to expire in and then one to expire out. And then, yeah, you can start just looking for new trades to put on. So it's been working for me. It's working well, and I'm just sharing that opportunity for free, as they say, for free. And, if you notice, since it's me and you up in here, and no one that watches the replay will most likely go this long, which is 2 hours and 4 minutes. So I don't know if you notice in my video, I'll drop more nuggets at the end of the video because I know those are the solid viewers. I don't really drop them like that in the beginning of the video. Towards the end, because y'all solid. Y'all rocking with me if you go into the end. So I'll start dropping some more stuff that I'm doing, or just nuggets, which I don't think other people do. So many other YouTube, I don't even think they trade. They just make the YouTube money and pretend they trade. Start showing you this and that. They ain't trading. How many people's pushing the button? Not many. And my babe's always here. Oh, JRH might not be here if you here then. Shoot, it says I only got one person up in here. Anyway, I'm gonna go ahead and end it. And I'll talk to you later, babe. And I enjoyed doing this video. I knew I wasn't necessarily going to get a lot of people coming in here, but I just wanted to kind of do it for myself. I'm not doing nothing. So I figured I'd just get on here and talk stocks, look at different things, talk it through. By the way, if you kind of by yourself and you talk things through like you are making a video, you'll find yourself trading better. Just talk out loud. When I started my YouTube channel, it worked for me. And my trading got almost better instantly because I started talking things in the air. Then I'll tell Babe, that's the jewelry box, Babe, I should have listened to myself because a lot of times I'm talking this, but I don't do it. And I need to listen to what Dre Trades is saying. I need to listen to what he's saying because he's talking the truth. And then that little trader in me that's all nervous and whatnot, might not do the trade. Right? And I was telling you how I got out of Nvidia and all that other stuff. But if I had a question that came over here and said, hey, man, should I sell my Nvidia? I probably would say, nah, man, it's looking good. It's popping, But yet, when you got money on the line, you just think a little different. You think a little differently. All right, y'all. I'm going to go ahead and end it. I appreciate everyone coming in here. Dre Trades on Twitter. Dre Trades on Instagram. And, of course, just any comment, in the comments of any video, and I'll answer it because I reply to every comment. So thanks for watching, and I'll talk to you guys later. Peace.